Good morning, friends. I welcome you all to yet another session of Quality Cafe on responsibilities of Joint Auditor SA 299 and using the work of another auditor SA 600. I'm very happy to note and share that Quality Cafe sessions are being well appreciated by the members at large. Today, in this session, we have with us three panelists and the moderator. Three panelists are Nihar Jambusaria, who is the immediate past president of ICAI. We welcome you, sir. Then Padmasri Cresto and CA Padmasri Cresto. Then CA Sanjay Khemani. I welcome to both of you also. And Mithil Choksi, the past chairman of the WIRC, and who is going to moderate the session today. So all these four are there, and we do have the secretary of CAQ with us, Ruchika Bachani, who is taking all the pen to channelize speaker as well as to organize all these kind of program as well as to provide the technical support to the CAQ. So we also have been receiving requests from, as I told you, that this is being well accepted by the members. We have also been receiving requests from the members on the topics that they would like to be covered under the series, and we have tried incorporating the same. These requests have been really encouraging, and accordingly, we would like you to continue sharing your feedback and request on our future sessions. We at the Center for Audit Quality is working on the ways and means for improving the quality and educating the members through the discussion is one such way. And why we are telling that today it is very important for all of us that if anything wrong happens, then the um, stakeholders point out their fingers on the chartered accountant, and everywhere the question of audit quality is being raised, and that is why the Center for Audit Quality, which has been established in 2020, it has been decided that we must build the capacity of the Indian firms and the Indian chartered accountants who are best in providing services of assurance and audit. So let us now dwell upon the topic chosen for the day, the concept of joint audit, uh, which is not new to India. The statutory audit on joint responsibility of auditors was issued. Standards on audit on joint responsibility was uh, issued way back in 1996. Joint audit work on the principle of two pairs of eyes are better than one. A joint audit means two or more auditors engaged in the same audit assignment as against single auditor. Currently, the joint audits are applicable in the case of PSU banks, insurance companies, and in some cases of the PSU companies also. In the year 2021, the Reserve Bank of India had also introduced mandatory joint audit for all the financial entities having an asset size of 15,000 crore or above. Simultaneously, in very recently completed the uh, report of the committee on the companies bill, there is a recommendation with respect to the joint audit. The other topic chosen to be covered during the session is using the work of another auditor, under which principal auditor has the responsibility of reporting on the financial information of an entity when the financial information includes the financial information of one or more component audited by another auditor. This SA 600 was issued in 2002. Friends, let me tell you that today, when these two essays and various roles, responsibilities of auditors in these two essays are being discussed and deliberated by these panelists, I'm sure that uh, it will add the value to the all members who have joined virtually, and I am sure it will help them to improve upon the quality of work and services which they are providing in assurance and audit practices. I would also mention that today's session would be, as I told you in the beginning also, will be moderated by Mithil Choksi, who is having fantastic knowledge of the subject. We are supposed to be also joined by our Deputy Convener, C. Ranjit Agarwalji, but due to some exigencies, he couldn't join today. And therefore, I welcome you once again, all of you, and request Ruchika to take it forward. Thank you.
Thank you, sir. Thank you for the opening remarks. Sir, Mr. Choksi is with us. He is going to begin the session with the introduction of the speakers, sir. Over to you, sir.
Good morning, everybody. A very, very warm welcome and a very happy weekend to all of you. So the concept of joint audit has been emanating from certain global countries. And we are very, very proud that ICAI, under the able leadership of members like Mr. Durgesh Kabra and colleagues like Ruchika ji and everybody else, Ranjit ji and others, are taking, and past presidents Niyar Jambusaria, are taking the step forward of pushing the entire fraternity, the agencies, the regulators towards the concept of joint audit, which is a phenomenal landmark transformation that our country is going to see. The initiator of this was the IRDA earlier, which promoted joint audits a few years ago. And thereafter, the landmark April 2001 circular of Reserve Bank of India, which again brought out the necessity to have joint audits. This is going to be transformational. This is going to make the Indian chartered accountants world class. And I think we are all in that journey. So having said so, since joint audit is going to be the flavor and going to be the future in India, needless to add, we all need to build up our standards. We need to enhance quality. And that is only possible if our guidance from the institute is enhanced from time to time. And therefore, we have SA 600 using the work of another auditor, SA 299, responsibility of joint auditors, and we need to deliberate and arrive at what is the optimization. Having said so, I would not like to waste any further time. Our first speaker for the day is going to be CA Sanjay Khemani, who will be speaking on SA 600 using the work of another auditor. And Sanjay sir, a very, very eminent chartered accountant. He represents the SMP segment, as he calls it. He is very experienced, seasoned, and on the boards of several banks. If there is one name in the country which is synonymous to banking and the bank audits, that is Sanjay Khemani. Sir, thank you so much for being present today, and we look forward to words of wisdom. Thereafter, we will be having CA Padma Shri Cresto. CA Padma Shri Cresto represents a large-sized firm, and she has over 17 years of extensive experience audit services across industry verticals of insurance, financial services, and manufacturing. And since joint audit has started with financial services, with insurance, it is needless to add that the responsibility of joint auditors, the SA 299 is what she will be taking up. Will ma'am, your words of wisdom will be really valuable. And just to add a little further about her, she's responsible for the quality assurance function in the audit and assurance services, which with technical includes deliverables, conduct of online review, cold review of audit files, and also managing risk by the firms. Last but not the least, we will have CA Nihar Jambusaria, our past president. Who does not know him? Nihar sir, as we call you Nihar sir, because he is a professor. And he has he has been a professor for close to 30 years since the time we have known him. So therefore we call him Nihar sir. Past president of our ICI, a blend of erudition, experience, foresight, technical expertise, and professional experience. And during his time, it was the immense effort that went through for the so-called joint audit circular, which ultimately saw the light of the day in 2021. So, well, I think we have the man himself, Niyar sir. Qualified chartered accountant in 1984 in practice, and now he's a prolific speaker, attended and contributed to several seminars in India, overseas, addressed more than 900 seminars all over the world on direct tax, accounting standards, international tax, and professional development. So, Niyar sir, we look forward to your words of wisdom, and we are very much thankful for you having come today to discuss with us the concept of joint audit, the views on the concept of joint audit.
Pleasure.
Thank you, sir.
Before Nihar Bhai starts, I would like to say that when in 2020, the Center for Audit Quality was established, Nihar Bhai was the vice president of the institute, and he has helped to whatever extent was possible in 2 years of his tenure as vice president and president for the Center for Audit Quality extraordinarily, and has given free hands that we can build up the capacity for the members at last. Over to Nihar Bhai. Thank you.
So who has to? I have to speak first.
Sir. As per the sorry, sir, Durgesh ji,
Okay.
you are our future, and sorry, sir, but as per the plan, the first speaker will be
Please.
And Nihar sir, with your permission, we
Yes,
are your
sure,
students.
sure.
So Nihar sir, with your permission, the first speaker of the session is CA Sanjay Khemani. Sir, we look up to you for your words of wisdom on SA 600 using the work of another auditor. We look forward, sir. Thank you, sir. Sanjay Khemani ji, sir.
Thanks, Mithil bhai. And I think Nihar bhai is right. If Nihar bhai has to speak first, that would make both mine and Padma Shri's job much easier. And as you mentioned, I frankly didn't know that Nihar bhai has addressed more than 900 sessions. So if he speaks, then I think, and I also feel, considering that his seniority and he has been the past president of the institute and professor at that, I think in all fitness of the things, I would request Nihar bhai, if he can speak him, and wherever anything practical is required to be added, we can do that. I mean, if that is okay with you, Mithil bhai, I have no hesitation in speaking first, but when Nihar bhai is there, I think it is appropriate that he speaks first. Nihar bhai, if it is okay with you.
Yeah, with me it is okay, but more the organizers can decide the order.
No, sir, please, sir. Please go ahead, sir. We'd like to hear you.
Yeah.
Yes.
Okay. Thank you, Mithil bhai, for a wonderful introduction. But more than the qualities, I think it is our good friendship of so many years that led you to say so many things about me. The chairperson of Center for Audit Quality, CA Durgesh Kapraji, let me compliment him for the number of webinars and this kind of programs that you have held in last 1 year particularly. And you have raised issues related to quality. You have sought the views of the experts who are in the audit field. You have also sought the views of those who are academicians and contribute to the formation and drafting of the standards on auditing. And this adds a lot of value to all those who are in the audit field. Today, I think even this particular session has been organized in the context of enhancing the audit quality. So let us look at joint audit, using the work of other auditors in the context of raising the quality of audit. And when it comes to that, let me first very briefly discuss what is the concept of joint audit. If there are some young members and who are not fully aware of this concept, then let me just very briefly, without referring to the auditing standards, because the two co-speakers, Sanjay Khemani ji, who is a very experienced auditor, Padma Shri C.A. Cresto is also a very experienced person in the field and who is going to speak on SA 299. So I will not dwell upon the standards on auditing, but let us look at the general concept, the necessity or otherwise to have joint audit, and what went into MCA issuing a concept paper along with many other reforms in the Companies Act. What led MCA to propose that joint audit should also be discussed widely, and they should call for opinion of general public, both the stakeholders and also the auditors. So first, what is joint audit? Joint audit in layman's language is audit of a single entity conducted by more than two firms jointly. So they put in the expertise of both the firms. The engagement partners of both the firms are engaged in the audit. They jointly work out the audit plan. They divide the responsibilities formally by documenting it as to who will cover which aspect of audit, and also discuss what is the joint responsibility and what is independent responsibility. For the exclusive work done by a particular audit firm among the joint auditors would lie with that firm. But at the same time, there are certain common decisions that the firms have to take jointly when they report. And for that, the responsibility would lie with all the joint auditors. And let me express my view that practically in India, although so far the joint audit is not mandatory, Section 139, subsection 3, clause B provides that where a company desires, it can appoint joint auditors. So there could be more than one auditor. It is possible, but it is not mandatory at present. Mithil Bhai pointed out that IRDA first took the initiative to make joint audit mandatory in respect of some of the audits of IRDA. Then RBI came out in April 21, and I remember that time in April 21, last year, there was huge debate on whether RBI should make joint audit mandatory not only for commercial banks, but also for all finance sector entities like NBFCs and other banks. So at that time, there was a debate, and finally the RBI took decision to make it mandatory. It sought views of the institute at that time. And I will also explain the rationale going forward as to what was the discussion in the council and what the council felt and what views we gave. Certainly, let me mention that the council gave positive view that joint audit would be good both for stakeholders. Secondly, see, Mithil Bhai mentioned, and I would repeat, that in so many other countries of the world, joint audit is being practiced, like Denmark, Germany, Switzerland, and the UK. And if I add two countries where joint audit is mandatory, it is France and South Africa, where it is mandatory. So what is the experience of all these countries? And we called for the experience. We in the council set the entire context of joint audit, and all the arguments in favor of joint audit and against joint audits were discussed at length. And we felt that particularly the over familiarity threat or the risk of over familiarity which prevails can be done away with if there is joint audit. There was discussion on independence. So although the entire council felt that even at present with single auditor, there is absolute independence. There is no lack of independence in audit at present. But if suppose there is joint audit, perhaps it will enhance independence in the sense that many times when there are two independent audit firms jointly responsible for the same task, it gives a lot of comfort to both the firms when they take a joint view. And there is also a scope of discussion of the matter related to an issue within two firms instead of only one firm. So if the other firm has also its quality control parameters and has also the training done within the firm, both the firms can discuss this thoroughly. Council also discussed what are the disadvantages, and one disadvantage which was brought forward by some of the stakeholders was enhancement in cost. So at that time it was felt that cost will not double. No corporate would pay double fee to two joint auditors, but the cost would go up by marginally by say 10% because of extra conveyance and other incidental expenses. Fee could be set by the joint auditors, so there would not be much increase in the cost. But then council also discussed at length whether even this 10% cost is worth incurring. And at the end of the discussion, we came to the conclusion that the cost of joint audit could be lesser than the cost of not doing joint audit. For larger entities, if joint audit is practiced, perhaps the risks would come down, risks of failure, and that would help. So the council felt even cost is a positive factor in that sense. There was also a discussion on whether there would be lack of accountability. Now we have SA 299, we have SA 600, which the other two speakers will discuss at length. And there are adequate guidances there. And as mentioned, even the institute can come out with enhanced guidance on joint audit to ensure that there is no lack of accountability. Both the firms are accountable individually in some areas and jointly in some areas. And there should be as much detailed guidance available as possible. And I'm sure that the Center for Audit Quality would also be working towards that. Then even one more aspect was discussed at length, whether it would be difficult for companies to appoint two specialists. I think in majority of sectors, more than one specialist firm is available. There may be very few limited sectors where only very limited firms may have expertise, but in all other sectors, the firms do have expertise or they have developed expertise, and they are developing with the help of training that institute provides and their internal training. So the institute gave feedback, and I am referring to the Ministry of Corporate Affairs notice dated 6th February 2020, in which they enclosed a concept paper, and point number 3 was on joint audit, and where along with the other stakeholders, even institutes' views were sought. And I remember there was a meeting somewhere in March 2020 or April 2020. Soon after the issue of this notice, the institute discussed, and I have explained what was the discussion there, what were the arguments for, arguments against joint audit. And ultimately, the council felt that joint audit would certainly benefit in the long run. There was one more aspect which was discussed in the council, that this would, on an overall basis, at a country level, give opportunity to every country to develop more than a limited number of firms in the area of audit. Because when more and more firms get engaged in the audit work practically, their expertise also gets developed. We have witnessed this in branch audits of banks. We have also witnessed this in the branch audits of insurance companies. Of course, branch audits of banks and insurance companies are not exactly comparable to audits of companies because branch audits are normally routine and have common procedures, whereas statutory audits of companies in different sectors require different kind of procedures and different kind of expertise. So they are not exactly comparable. It is not apple to apple, but still they are comparable in some areas. So then we felt that joint audit would add value, and it would add value to audit committees, investors, and even other stakeholders here, like regulators, like tax department, MCA, and even the banks and financial institutions who use the audit report and take it seriously and act upon them. So this was a background of joint audit. I also had the opportunity of attending all these meetings, and since the discussion started in March, April 2020, at that time I was vice president. This went on for almost a year, and then the views were sent during 2020 only to MCA. So these are the views that even I share and I endorse, and I thought I will put before you. So these were the initial views on joint audit, and I would give it back to the moderator for further course.
Thank you, Nihar Bhai. That was an excellent words of wisdom, as they say, for all of us. Nihar Bhai, Nihar sir, thank you, sir, for taking us through the journey, including Section 139 of the Companies Act and the working group paper. And just to add, sir, even the London Economics for European Commission has very clearly highlighted that how the two countries, France and Denmark, where there are joint audits, are the least two concentrated audit markets in Europe. So therefore, this is becoming an international trend, and the critical 4I approach, which has been referred in the working group paper also of the Companies Act, which you kind of highlighted, makes a good case for joint audits, but at the same time, it requires us to enhance our skill sets. Sir, we, and I'm sure many participants and all of us have questions, sir. We will, with the permission of Durgesh ji and Ruchika ji, we will come back to those questions after the session is addressed by Khemani ji and CA Padma Shri Castro ji. So with this, we conclude the comments of Nihar sir with regard to his presentation on joint audits, and we now move over to our very experienced and eminent CA Sanjay Khemani ji. Khemani ji will take us through SA 600. SA 600 comes into play when you have a parent auditor different from component auditor, when there's consolidation, when it requires two joint auditors within an organization, one relying the work on another auditor, in what components and on what areas we need to also take our independent view. In lighter vein, I would say, if Khemani ji, aap hamare joint auditor hote, to I would rely completely on you and I would sign off based on what you were doing. So having said so, with this, Sanjay ji, CA Sanjay Khemani ji, over to you, sir. SA 600.
Thanks a lot, Mithil Bhai, for that confidence that you have reposed in me. I don't know whether I'll be able to live up to that kind of a bar which you have raised for me. And thanks a lot, Nihar Bhai, for the initial heavy lifting and making my job a little easier. Now I'll come to the topic. So while the topic is the discussion is mainly on the joint audit, I'm supposed to be speaking on the topic of SA 600, which is using the work of other auditors. So which is actually not relating to the joint audit. That is mainly using the work of another auditor, either during the course of when you have a branch auditor reporting to the principal auditor, or in the case of an audit of a consolidated financial statements where any other component other the branch auditor, could be our subsidiary, associate, joint venture, reporting onto the group consolidating auditor. So group consolidating auditor, as all of us know, under the SS 600 is known as the principal auditor, and the auditor of the component, be it in a branch or subsidiary, associates or JVs, are known as the other auditor. So when the in the consolidated financial statement, the principal auditor or the man auditor, when he's issuing the report, he obviously is not carrying out the audit of all that which goes into the consolidated financial statements. So typically, while SS 600 do permit us to rely on the work of another auditor, if you look at ISA 600, which is the one which is applicable in most of the other countries, there this kind of a concept of relying on the work of another auditor is not something which is in vogue. We have to, the principal auditor is expected to be issuing the report without giving any reference to the work which has been carried out by other component auditor. So he ends up assuming the responsibility not only for the work which he has done, but also for the work which has been done by the various component auditors. So accordingly, the procedure there is quite different. But since our topic for the today's session is on the SS 600, I will restrict myself to the provisions which are applicable to the SS 600. Most of us may have experienced this on SS 600 because we have been doing either the branch audit in some, somewhere or other, where we do report to the principal auditor. So the SS 600 has been prepared, is basically to guide the principal auditor. The relationship between the component auditor and the principal auditor is actually getting governed by this, and what kind of a role and responsibility which principal auditor has to perform when he is issuing the report of the consolidated financial statement gets covered in this. Now, all applicable standard on auditing are also applicable to the consolidated financial statement. So it is not that SS 600 is the only one which is applicable. This is in addition to when we propose to rely on the work of a component auditor. Now, how do we approach that? So first of all, we need to be looking at which are the components which are material and which are the components which are not material. This does not apply to all the components. If let us say a component which is insignificant from the CFS standpoint, then whether the procedure as laid down by in SS 600 is required to be carried out by the principal auditor, the answer is clearly no. Now, so in this, what is the principal auditor generally issue a group audit instructions, which is what is the basis on which the reporting of the principal auditor concludes on the various matters on which he is supposed to be reporting. So while the financial statements as per the general purpose financial statement would have the statement as per the framework, for a consolidating auditor, there may be other additional information which is required to be included in the financial statement of the console. So on those particular areas, we need to get a comfort or from the component auditor. So the starting point for any CFS audit or for a SS 600 compliance is to issue a group audit instructions. Now, the group audit instructions consist of various components within that. So first is a communication between the principal auditor and the component auditor stating that principal auditor proposes to rely on the work of the component auditor. So component auditor should be agreeable to extend the full cooperation to the principal auditor, while the standard does not expect that the component auditor is supposed to be sharing the working paper of his work which he has performed on the component auditor. At the same time, the summary of various conclusions and the various specific issues which the principal auditor determines which are material for the purpose of the consolidated financial statement are something which are posed to the component auditor, and the component auditor is supposed to be providing response to all those questions. So to give an example, the materiality for the component, while the component auditor would be determining the materiality for its standalone financial statement, but for the purpose of group reporting, it is the group auditor who will determine what is the component's materiality. Then the key risk areas, while the component auditor would be looking at the key risk areas on his own for the separate financial statements, yes, they will supposed to be doing it. But from the group's perspective, the group auditor may also determine certain areas considering his knowledge of the group, because as a component auditor will have access only to the component's financials. He might not have overall view of the group. So the group auditor will express the deliverables to the component auditor that these are the additional risk of material misstatement which has been identified by the group auditor for the component on which the component auditor is supposed to be reporting to the group auditor. So like that, there are so many items which gets forms part of the group reporting instructions. So let's say early warning memorandum. So if during the course of an audit, while the report of the component auditor would be available only maybe a few days before a group auditor is supposed to be issuing his own report. But if there are something which has come, the component auditor has come across which might have a bearing on the consolidated financial statements, then the component auditor is required to report to the group auditor those by way of an early warning memorandum, so that the principal auditor is able to factor those issues while preparing or while having his own audit plan. It might because of that early warning memorandum, he might have to modify his own audit plan to be able to get an reasonable assurance that at a group level, the financial statements are free from material misstatements. So like that, there are various types of areas on which a component auditor is supposed to be reporting to the principal auditor. The moot point, what is relevant for us and in the given time, probably I would like to highlight is that the relationship between the component auditor and the principal auditor has to be very good in terms of the clear and defined reporting lines. If that component happens to be in a material subsidiary or a material component, so that a group auditor is able to place reliance on that. Else, the group auditor might have to carry out the additional work which was never intended, because the whole purpose of SA 600 is to place reliance on the work of the component auditor. And when we are looking at this SA 600 with the SA 299 and the joint auditors, joint audit, while this standard does not deal with this also, in a way, gives the way the joint auditor is supposed to be working, because while this is a subject which Madam Padma Shri is supposed to be looking at. So the coordination between the way that you have a well-coordinated audit approach in the case of a joint audit, the same is also warranted when it comes to the relationship between the component auditor and the principal auditor. And if that is something which happens, then probably we would have achieved the objective with which the principal auditor is supposed to be relying on the work of the joint auditor. I think given that the time within which I am supposed to be taking up the topic, I have already exceeded my 10 minutes which is allotted to me. So with this, maybe the short description of what the SA 600 entails, I'll stop here, and I will request.
Sir, you have about 3 more minutes. You may proceed, sir.
I have a few more minutes.
3 more minutes, about 3 more minutes. So you may proceed,
Okay.
sir, because.
Okay. No, I saw that. Okay, my 10 minutes is already over, so I thought I must stop.
But because we started about 5 minutes late, so you effectively have about 3 minutes left. So
Sure.
and we would not want to lose out on your words of wisdom.
No, thanks a lot. So, few of the important areas where the group auditor place reliance only on the work of the, I would say, the component auditor is, so one is on compliance with the group's reporting accounting policy. So while every audit, and to give an example, so while if the component happens to be operating in a different industry, so industry specific accounting policies may be prevalent in that. But when it comes to consolidated financials, the operating the policy, I mean the accounting policy of the in the parent could be quite different than what is there in the case of a component, and particularly if they are working into two different reporting frameworks. So if you have a bank as a parent and the NBFC as a subsidiary company, while NBFC works under the Ind AS, bank would work on the IGAAP. So the accounting policies which are different are going to be different for the bank, and those are the accounting policies which are supposed to be applied by the component auditor. And that is not something which would be available from the general purpose financial statements of the component, because those are specifically prepared for the purpose of the consolidation of the component into the parent entities. So the group auditor provides the accounting policies to be followed. Group auditor also provides list of the related parties, because while the related party for the component may be limited, from the group perspective, those list of the related parties can be quite large. So when and for the purpose of the consolidated financial statements, when the elimination of the intra-group transactions are required to be carried out, it becomes added responsibility of the component auditor to see that all the transactions with all the related parties at all component level has got reported and that get eliminated, so that the profits or the transactions between the or amongst the group members are something which gets eliminated when he is reporting on the consolidated financial statements of the group. And needless to mention, another point which is very, very relevant is the group reporting timeline, because while in the case of a component, the timeline, and considering that nowadays everybody is working within a very tight timeline. So the timeline within which the data which is required by the component, I mean by the principal auditor from the components, so that's something which is also being agreed well in advance. And if there is a gap between the time the component's financial statements have got approved and the timeline when the group's financial statements are getting approved, then the subsequent event memorandum also plays a very significant role, because that's where the component auditor is also supposed to be giving what has been the subsequent event from the time their components auditor has approved the financial statement till the time the parent's auditor is going to be approving the financial statements. So these are the key considerations which a component auditor, principal auditor would be placing reliance on the work which is being performed by the internal, component auditor. And I think with this, I have consumed whatever time which has been allotted to me. Thanks a lot, Mithil Bhai, and thanks Durgesh ji and Ruchika ji for providing me this an opportunity. Thank you.
Thank you, CA Sanjay Khemani, sir. I think we've really got a complete perspective of the journey, starting with Nihar Bhai with regard to the journey and the concept of joint audits internationally, thereafter getting into the concept of consolidating auditors and therefore SA 600 and therefore CFS, and our classic case which we've been used to right from our articleship days is the classic consolidation of bank branch audits. And we've always had this issue as a bank branch auditor. If I do a qualification at a branch level, does it necessarily culminate into now a modification at the HO level at the consolidation stage? And I think that's been one of the classic issues that we've seen the journey over the years, which has obviously manifested today into multiple scenarios. Like today, the global subsidiaries of a listed company, we need to make sure that all their accounts are received by us in IGAP, duly certified, in the same accounting policies, with the same accounting policies, mapping to the consolidating auditor. So, well, we have seen this journey over the years, and I think many more to come and many more questions, sir, we have with this. And without taking too much of time, the ICI, therefore, on one hand, you have the starting of the, the joint audits, thereafter the component auditors, and now how do you standardize concept of joint audits? And therefore, you have SA 299. SA 299 enhances the processes, procedures followed by joint auditors whenever they are, for the purpose of synchronization, making sure that everybody standardizes, the CA fraternity presents their accounts in a cohesive manner. And with this and more to come, over to CA Padma Shri Crasto on SA 299.
Hi, thank you so much, Durgesh ji and Ruchika, as well as thank you, Mithil ji, for the introduction. And needless to say, I think a lot of things have been covered by Nihar sir. So, the 2003 ICI study group conception, and then 139.3 making a provision for joint audit, as well as the 2021 RBI mandate on the joint audits. I think he had been there and done those discussions, so that helps a lot to be in the eye of the storm, I would say. And from an external perspective, we can look at and we can very much understand how it is to be in being there for as part of the discussions. So that gives a different perspective altogether. Thanks, sir, for adding that. And he also touched upon the MCA paper, wherein this concept of joint audit has been reiterated. And then it's also one of the things that I would like to add in about the MCA paper is that one, it says that joint audits can bring in value, and at the same time it also talks about liability of the joint auditors, which is very important to consider. So it expects that some guidance will be laid down with respect to the liability of the joint auditor. So one of the things, if we see in the SA 210 engagement letter implementation guidance, which has come out 1.5 years ago also, it adds some additional clauses which were very necessary, because audit is also a contractual obligation. There can be a limitation of liability. There can be professional obligation liability limitation, and also there can be law and jurisdiction and misrepresentation coverage as well. So one of the things that's very important to note that MCA, I think, has recognized that, and they have said that, liability should also be landscaped in the given position. As respect to coverage of joint audit, as per, I think, IFAC has estimated in the last year's report, I think, that more than 55 jurisdictions across the globe, it's like joint audit is something that's working, may not be completely mandatory. But it is something that's there. And also the France, in France, it's legally it's legally in there from 1966 itself. South Africa is something which is actually similar to us, wherein for few of the financial services sector, it already has mandated joint audit. So if you look at and UK also, it was very much in discussion for joint audit mandates, and there were a lot of discussions around in UK. So if we look at world as a whole, I think we are moving towards a direction wherein one auditor is not enough. We need more. So that's the on a lighter note that we can talk about. So if you're talking about, I think Sanjay sir and Nihar sir also mentioned about IRDA initiating joint audit as a requirement. One of the things that that had been advantageous to me, I started my career and then in the initial years itself I started doing insurance companies. So kind of, I can say, used to the joint audit landscape. Wherein in the new mandate in RBI, few of the people are struggling how to do a joint audit, what will be done by me, what will be done by us. I think some of us are so acquainted and we know what is to be done, how it is to be done. So it comes as an advantage and handy. When doing joint audit, practical aspects that has to be consulted is, considered is something that I would like to touch upon, because I think overview and landscape has very much been described by Nihar sir. Practically, the only thing that works is discuss with the management, with the joint auditor, internally within the team, and even our audit team members, juniors, and other people become friends of other junior, other team members, and we get to know of various issues in those areas. We have formal joint audit discussions also, wherein we are supposed to bring in any of the issues that we have noted for their areas, as well as the important highlights that we have seen in our own area, which we have separate discussions with the CFO or a joint discussion with the CFO. Because ultimately, all said and done, financial statements is responsibility of both of the auditors. We both are signing. Say, for example, if there is something that is not appropriate or something that is not disclosed, we can't say that, okay, that portion I didn't do, he did it, because financial statements is something that always is the core, which is actually has to be looked into by both the people. We always talk about this joint responsibility statement, what is mine, what is yours. So there are different practices that exist. You divide the responsibility at some people do it at the balance sheet level, some people do it at the schedule level, and then, ultimately it is done at the TB level also, so that no account is left out. And then we always, there is, one junior guy in the team who knows Excel well. Every time a new TB comes, his job is to put a VLOOKUP and see any new accounts and then map it to whoever. And always he says, this is not my account, this is the joint auditor's account. And that's typically what happens, because you don't want to do the work at the end, and then you don't want to be subject to a partner and a senior review at the last minute. So those being the nitty-gritties, because all these things keep happening, it's very much necessary to continuously be in touch with the management. Right from agreeing to the fees, the joint responsibility allocation that we end up is not branch wise. There are people that equidistribution of asset, liability, income, expenditure. So if I'm taking revenue, the related asset liability item. If I'm taking expense, then the related asset liability income. So typically on an insurance balance sheet, you can say business, non-business area is something that we call. So generally premium, commission, and related asset liability area is done by one person. Investment claims and the related asset liability area is something that is done by another person. Another thing that I would like to touch upon, which is very important thing, is the common area. We have a lot of common area. So common area can be something like a minutes register, which are obviously we both have to read, because there can be risk implications, there can be additional implications on the overall reporting. So common areas is very important. Common areas can be something like subsequent event, going concern assessment, ratios that are necessary, the minutes and registers, the non-financial information like filings and compliances, and then any regulatory reviews. So if you see in the financial sector, and also now in the other sectors as well, where it is not a financial sector, there are regulatory questions or regulatory inquiries that come up over a period of time. So these are absolutely common area. Contingent liability is something that will be a common area. Related party is a common area. So it is necessary to understand that it's not mine or yours, it's ours there when it comes to the financial statement, because ultimately we both are signing the audit report together. So it is very necessary for us to understand it in that perspective, and to put up our procedures also in that procedure. It so happens at times practically that the other auditor or finds out something which is relating to your area, because you may not have it's not that you have not paid attention, but then while doing some other procedure in his area, he comes across one of the items that is actually relevant for you. So it's his responsibility to come and tell you, and it's equally your responsibility to acknowledge it and take it forward, rather than saying, why did you touch my area? Who told me you to actually get into this? Don't come here, and things like that. It's always beneficial to share those thoughts. And if there are contentious matters, so we all believe that more people, more eyes and more brains are always better when there are contentious matters. So it helps to actually discuss with peers who are other joint auditors, and then share our thoughts and then come to a conclusion, because they also may be having a technical team who will give them inputs. We also may be having a technical team who give our inputs, and then our thoughts, everything pulling together has huge benefit. So when there are contentious matters, I have often seen this gives huge benefit, and actually the angles in which we have not thought actually get another, and it is quite beneficial there. So at the end of the day, I think few of the things that we all have to keep in mind at all times is we are going to sign the report together, financial statements together. Our letter of representation is common. Engagement letter will come to it, and then when you look at from a larger perspective, that's also common as per the SA 299 that is revised. And the underlying and common thread to all this is coordination. So necessary coordination at the time of planning, at the time of process notes. Some of the things that we do together are like ITGCs, because IT systems are common for both of us. JV testing we have to do together. So these are the things that we can leverage upon. And also discuss and have better efficiencies here. In case of migration or something happens, then even the IT responsibilities can be done together, which will actually be helping more efficiency to the client. One of the things that's commonly seen is client is not much willing to tell both of us in separate pouches, and he will not appreciate that you come and ask me the story, then he comes and asks me the whole story. So he will always prefer both of you come together. I will tell you everything at one go. So I think that's the underlying in the true spirit. If we have to make the joint audit successful, whether it be a financial sector or a non-financial sector, coordination is key. Is the key and the underlying common thread which actually ties up all the loose ends and actually ties up all the kinds of binds all the things together, which enables us to actually sign the common report and the common financials. Largely, I think that's all I have to share in this perspective. And also documentation is something that's very important of all this coordination, because we live in a world where if what is not documented, it's not done, because all the regulatory reviews, everything that happens together. And one of the important things to note is, if in a company, if you have joint audit and if you are the joint auditor, review happens of the joint auditors, both of them together. So you just can't say that, okay, this is done by the joint auditor, thinking that no one is doing that piece. So it is like that common joke that we have when the guys to the college came late, and then professor asked the reason. They said tire puncture, and they took them to 4 different rooms and asked, and each of them answered different tires are punctured. So we shouldn't end up in that. We know that which tire is punctured and how we have repaired it is very important to know on a lighter note. So whenever these reviews also happen, so perfectly it has to be in tandem as to what we have done and what others have done. It cannot be just a pushback saying that I haven't done it, he has done it, because review is also happening there. And if you are just throwing the ball into the other side, it will you will come to know what has happened, and that may have serious consequences. I think largely that's what I have to share. So Mithilji, over to you.
Thank you so much, CA Padma Shri Krastoji. And you touched upon a very, very relevant issue about the joint QRB. There is no joint QRB, and you are both interrogated in separate places, and we have to be in tandem, and we've experienced it. we used to be so much when the QRBs were going on, and we've seen a journey of several joint audits. We would be on the phone in the nights. After the QRB auditor would go back to the hotel room at 9, and between 9 and 12, we would check with the other auditor, Baba, koi problem nahi na aapka aur hamara. And that's how we used to synchronize.
Absolutely.
But on a practical front, joint audits, as chartered accountants, and because we are such a close-knit fraternity, one thing that, and in our journey, we've seen so many joint auditors. One thing that we have always resisted from a joint audit, exercise, which leads to negativity, is there should not be one-upmanship. The common problem is between joint auditors, and this is more a practical issue, not in the SA 299, but we don't want to be one-upmanship. So there are times when some joint auditor will say, oh, you have 10 slides in the presentation, I also must have 10 slides, even though their observation may be 4 or 5. So, and Nihar sir, this is more a more practical and pragmatic issue that we face. That, Arey Baba, ye inka 10 slide hai, to hamara kyun 6 slide hai? Chalo, find out 4 more slides and add them, even though they are not relevant. But I mean, we have to get over all these, immature-ish behavior at times, because what we look at it is a joint audit is, you are always learning from the other auditor. And if we look at it positively, that we are here to learn with the other auditor, and we are even 2% learning is worth 200% for times to come. So, but for the allocation, we've devised a very interesting model in today's times. We allocate GL code wise. What we do is we allocate the GL codes to the joint auditor. So what happens is that no GL code is missed out. And despite that, sometimes it may so happen that a loan may be verified by us, but the second limb of the transaction, being an investment of the same loan, may be verified by the other auditor, and sometimes both the auditors miss out. You're looking at each other in the board meetings. Hey, what's happening? You did it. They'll say, you did it. So these are some practical issues I'm sure we will, address in the next 45 minutes or 1 hour that we have. And there are many more from the panelists. So with this, Ruchika, Durgesh and with all your eminent speakers, Sanjay Khemani ji, sir, Niyar sir, and Crasto ma'am, we can go over to the questions. Before that, Ruchika ji, would you like to have any comments?
Sir, the discussion we have heard, Nihar sir, on the rationale at the council level, the background really helped us to understand the basis for the ICI taking a call. But then here at the Center for Audit Quality, sir, we have 299-600 in place, and our purpose is to educate the members on the requirements so that, the audit comes out to be effective when the joint players are in the same on the same financial statement. What we intend to do is that, we have more effective audits. As Padmashri ma'am just talked about, she talked about the ground reality, how we are actually allocating the jobs. And especially she spoke about the common areas, how, both the auditors have to be together and communication being the key. Yes, these are the things we want to talk about. These are the things we want to be we want to touch upon, so that the auditors, the members fraternity who are attending this on a weekend, every time we have this on a weekend, they're able to make the joint audits more effective. Whether it comes as a regulatory mandate, if the management chooses per se to have joint audit, the purpose should be to give effective audit together. So the discussion so far has been really, really fruitful. I think the participants are making the best of it. Now, sir, we can go ahead with the panel discussion on the questions on 299 and 600. Sir.
Yes. Thank you, Ruchika ji. And over to now. So sir, CA Sanjay Khemani ji, sir, the first, thought and the question that we have posed for discussion is, what is the responsibility of the principal auditor in respect of other auditors' report that is modified? And if we can have your views on that.
Okay. So if you recall, when the guidance note on the audit of consolidated financial statement was presented, Initially, the view of the institute was that if there is a qualification or a modified opinion which has been given by the component auditor, then it was necessary for the principal auditor to carry that qualification irrespective of the materiality involved.
Yes.
Subsequently, in 2017, the institute came out with a clarification stating that no, materiality is something which is required to be considered when we are evaluating any modification which has in the report which has been issued by the component auditor. So, to give you an answer of specific question, whether it is our responsibility to carry the modification as it is, the answer is no. We as a principal auditor are supposed to be looking at the issue from the materiality perspective, how material that particular qualification or the modification is with respect to the consolidated financial statement of the group. Because when principal auditor is going to be reporting on the group's financial statement, so while it may be relevant or maybe material from the components perspective, it may not be so when it comes to the consolidated financial statement perspective. Okay, so that is one. Now, second thing is practically how we should be dealing with it. So generally there is the practice has been you engage with the component auditor, understand from him what has been the considerations because of which has led to this report getting qualified. Now, apart from the materiality perspective, there is something much more to the financial materiality number, which may have an impact on the consolidated financial statement also, either on the immediate basis or going forward. Then as a component auditor, it is the responsibility, as a principal auditor, it is the responsibility to the principal auditor to engage and determine the likely impact of that in the consolidated financial statement and then take a call whether any modification is warranted or not. I hope I have been able to address the question what you have.
Thank you very much, sir. Absolutely. And sir, just an additional follow-up question, if I may, that sir, does the principal auditor also need to necessarily undertake a supplemental test or not?
Not necessarily. Not necessarily that he has to carry out any supplemental test. One, on the materiality, on the face of it, based on while it may be components materiality, it may be below the materiality threshold for the group. That could be one of the reasons. So, engaging with the component auditor is in a desirable situation, just to get in a perspective what has led to the component auditor qualifying that. It is not something which is mandatory or necessary thing to do.
Noted, sir. Thank you so much, sir. Next question, if I may, is to and opposer is CA Padma Shri Cresto. So, in case the principal auditor, considering the audit findings or the other matters affecting the financial information of the components, decides that supplemental tests of the records or the financial statements of the component are necessary, then who is to perform such tests? The principal or the other auditor? If performed by the principal auditor, then how does he report the supplemental tests so performed in his report?
Yeah. So I think at the beginning, Sanjay sir talked about ISA 600 versus SA 600. One of the things that we have advantage in our jurisdiction is that we can write that carve out para in other meta paragraph, which says that I have not done the audit of these components and this is done by someone else. And that's the advantage that we have, which actually other jurisdictions don't have. But the overall SA 600 is actually designed in a way which actually leads to similar conclusion, though at the end of it, you are carving out some of the financial statements of the components. It doesn't give you any, discount or any complementary assessment to say that there are some risks sitting in some of the components. Let me leave it and let me go ahead. It actually comes back to the ground reality that if there are additional procedures that, so just I'll take a step back to say that when we send the group audit instructions, which actually to the various components, when they report, and if they report that there are issues, either we tell them that you please do these additional procedures and give it back to us, or if they are affecting the group as a whole, then those are the things that actually we can also perform, because the holding company auditor, the parent auditor, can ask certain questions to the components management as well as the holding company itself. So we can also perform procedures if the matter is affecting the group as a whole, and then conclude on those matters as to whether it is necessary to further modify the audit report or otherwise. So it depends on circumstance. We can very much actually tell the component auditor, if it is pertaining only to the component, to say that, in the group audit instruction itself, one of the things Sanjay sir mentioned about early warning memorandum. If things get highlighted in the early warning memorandum, we can help them in actually designing the audit procedure specifically. Even at the highlights memorandum at the end, if we come across issues, we can ask additional questions. We can request for access to extract of working papers, and then try and conclude on the basis of it. And in case if it is necessary for us, if the issue is actually at the group level, then we can also do some procedures at the group level, so that we complement and ensure that the audit opinion at the group level that we are issuing is actually a proper report, appropriate report. I would use the term appropriate report, because in the given circumstances, and it's well concluded.
Thank you so much, madam. And, again, we CS are used to a little out of the syllabus. So therefore, I would like to, sum up and put a poser to our past president, Niyar sir. And Niyar sir, if as CA Crastoji mentioned, that, in the judgment of if the judgment is involved by the group auditor on the, report of the component auditor, and if for any reason in their judgment, it is not necessary and it is having an underlying basis, आप डीसी में तो नहीं डाल दोगे ना, नियार सर? Niyar sir, Niyar sir, and this is an out of the syllabus question, but we are used to it as CS. So,
yeah, no, even in the disciplinary committee, institute doesn't take action on its own in such matters. But if there is a complaint, then there would, of course, be a very fair play, because for 2 years, I have chaired different benches of disciplinary, where even if the government nominee who is not a hardcore accountant, who has not studied accountancy, takes a different view, we convince them and take into confidence and tell them that here it could be a difference of opinion, it could be a matter of judgment, where if there is nothing suspicious, one should not go ahead holding somebody guilty for such a matter.
Thank you so much, sir. Thank you. And now we have some poser to CA Padma Shri Crastoji and CA Sanjay Khemani ji. What are the additional considerations that underline the decision of being appointed as a joint auditor vis-a-vis appointment as an auditor?
Sanjay sir, can I go first?
Yeah, please go ahead.
Yeah. So I think the qualifications that are necessary as per section 131, 139, and necessary independence and other consideration 144, and things like that, I think those go without saying, where these are very much essential so that the appointment is done. A few of the nitty-gritties, practical nitty-gritties that I would like to touch upon. Say case number 1, where there are 2 auditors. One of them is actually has completed one of the terms, and then he is not being reappointed, or he does not offer himself for reappointment, and we are replacing that auditor. It is necessary for us to take NOC from the outgoing auditor, because that's very much necessary as per Code of Ethics. There is a practice that few of them take NOC from the existing joint auditor also, which I think is subject to it's questionable, because he is existing and he doesn't have to provide an NOC because company is already appointing you. Some of the terms and conditions which are very specific to some of the industries like NBFC or insurance, where you have to keep meeting the eligibility of the limits and other matters that is very necessary to be touched upon. Also, have the fee discussions. I know very less people talk about it, but then it's necessary to talk about it. Have the fee discussion, have clarity on what's your portion and what's the other auditor's portion. So in some of the cases, there are some statutory certifications also, which are to be done along with the audit report. So that may be done by one auditor, or that may have to be done by joint auditor, depends on case to case basis. It will look ugly at the end of the year to say, I thought I will get the certification, you thought you got the certification, so my fees became less and things like that. So have a lot of clarity as to who is doing which thing, and what is it that we are looking at it. And also all these considerations goes needless to say that it boils down to the risk of the entity, the acceptance procedures that are necessary to ensure that we can accept that kind of, the firm has the risk appetite, or it needs the reputational and other considerations under SQC 1. Those are anyways underlying for all kinds of entity. One additional thing that I would like to point out is at times this also has to be documented, that who is the joint auditor and understanding of the joint auditor as well, because you're going to sign the financial statements along with the other firm. So it's necessary to understand the joint auditor as well. So you can design a simplistic questionnaire to understand the joint auditor and also understand the quality function in his team, so that you are at par. And then, it gives you a comfort that I think at the initial stage, Mithilji, you mentioned that if Sanjay is the joint auditor, you would sign it without any concern. So, to support that, I think we need to have some documentation around it to say that, because, we will have to maintain those things in the file.
Just to
yes, sir.
yeah.
Yes, sir.
So just to supplement what Padmasree ji has said. So I think I will look at the biggest advantage from professional firm side perspective. I'm saying from our perspective is the kind of learning which we have in a joint audit. That's something which is missing in case when we are. And I believe the question is whether appointment as a joint auditor, we should be a sole auditor, right? So the kind of learning one goes through in a joint auditor, that's tremendous, because at our level, Mithil bhai, so you always believe what you are doing is right, okay? And the only time you get challenged it only when you have a QRB or you have maybe the NFRA. Now, obviously, you would not like to be challenged at that particular point of time. You would obviously prefer to be challenged by your colleague much before. So, as an engagement partner, the biggest benefit I see is that you get challenged by the joint auditor day in, day out on an issue where you want to take in a particular stand, and your joint auditor, you will also have to convince them, or you have to get convinced with whatever view they have. So that's the single biggest point, coupled with the, frankly, the kind of mutual consultation which takes place, the sharing of the expertise which takes place between the two firms. That's something which I would say is in a bedrock of the way an effective joint audit should work. Of course, as Padmasree ji said, understanding the joint audit is also very, very important, because while there is a joint and several responsibility on the area specifically identified, since you would be signing on the on a single report, it is necessary that we are fully aware of the practices which our joint auditor also has. And that's the reason engaging with the people is something which becomes very, very important in any joint audit assignment.
Absolutely, sir. And we've had such a journey. I mean, our firm has had such a journey of joint audits, and it's been an immense learning, outstanding learning, and that's a real case study based learning, practical, which you sit across and learn. So thank you so much, Madam and Sanjay sir. Madam, just follow-up question on your thoughts about understanding the other auditor, and I know Sanjay sir also kind of referred to it, but ma'am, if we were to document on something on the other auditor, now are we not on a thin line between relying on the work of an expert and kind of documenting something about that auditor? I mean, just if I may, more an intellectual stimulation rather than trying to understand the nitty-gritty. So
no, I agree. So when we do the relying on the internal audit on another auditor, it may be a component auditor, it may be an internal auditor. When we are relying on the internal auditor, we also look into what is the area that he is auditing and how we are going to rely on it. But in case of understanding of joint auditor, we largely stop at what is his competencies, what are his capabilities, does he have the experience in the relevant industry, and what are his quality systems, and what are his, if at all there have been some question marks or some I'm just giving a random example, some kind of a disciplinary action, debarment on the joint auditor. So one of the things, if you see with that SQC1 tells us is that whatever we do is all guided by SQC1 as a firm. And then when we are signing jointly with another firm, that firm also has to abide by the SQC1 because we both are into practice in this country and to both of us it is applicable. So when we are looking at that as a holistic perspective, then it makes us requisite requirement to ask the other person as to where do you stand, because I'm signing a report with you. It's like no offense meant, but however, I want to understand what's your quality system and what are the things that you comply with. Do you have a peer review certificate, for example? Do you have any quality matters that have been raised, or do you have any of the regulatory or other actions taken? So these are the basic questions that one has to ask. And if there are some concerns, then one may consider performing some additional procedures or doing some additional work, because then it won't fit into your SA 315 otherwise, because you have to do the financial statement risk assessment also, and then your SQC1 assessment also. So that's how it won't be relying on the other person, but at the same time understanding who is the other person.
thank you so much, ma'am. Sanjay sir, any rejoinder?
No. Thanks.
Okay. So now we go over to our Nihar sir, our past president, and Nihar sir, are you there, sir? So Nihar sir, from the Nihar sir, our past president, sir, from the management perspective, in case where there exists no regulatory requirement, under what circumstances the audit committees may consider appointing joint auditors?
Yeah, it's a good question, because even today in India, it is not mandatory, and the company would have various considerations for appointment of joint auditor. One such consideration could be the volume. If the volume is big, then only it makes sense. That is number one. Secondly, if the management feels that two experts, two auditors would certainly add value, and particularly where a company is engaged in multiple sectors and they appoint joint auditors with experience in different sectors, it could be another consideration. See, apart from this, there are other considerations for bigger companies. We normally call them public interest entities, where they have borrowed huge fund, or they are listed companies, or suppose government investment is beyond a limit. So in such companies, the risk of over familiarity could be one of the considerations. Four eyes approach, the principle, could be another consideration. Even where the company feels that if there are two different firms, then even rotation of firms in the field work Like one firm is doing in, say, first 2 years or 3 years, it is handling some of the areas. Then after 2 or 3 years, the firms can be rotated internally. So all this comfort would be available if the company's size permits, if it's complicated nature of, or if it is engaged in multiple sectors, then it makes sense. So this could be the various considerations for joint.
Thank you, sir. And sir, if I may, a quick follow-up question. Sir, what very often happens is that, on a practical, more on a practical basis, the public interest, public interest entities often say, "Arey, one auditor is anyway a headache. Why do I need two auditors? So why do I need two headaches on a more practical front?" And they say, "Why should I manage two auditors? One is anyway a headache." So
Yeah.
that's a typical mindset that we have more at the management level.
Yeah.
And sir, just to manifest it, in one of the companies where we were joint auditors, for 10 years, they did not change the areas. They said, "We want you to handle only these areas and you to handle only these areas." For 10 years, 5+5, they just did not change the areas. And we kept on proposing, "Please rotate." And they said, "No." So, I mean, just an example. So this is just an illustration. Sir, your thoughts, please.
Yeah. No, it all depends on what is the approach of the management, what is the approach of audit committee particularly. See, I have witnessed many companies which did not find it as a headache, but find it a value addition, like Reliance Group, for which I worked and I am working in the tax area, but I have seen two auditors working in complete sync with each other, discussing matters extensively. Some of the concerns which Padma Sri ji expressed, they are there in every joint audit, but these two firms, and even after the rotation, both the firms were rotated, because they both the earlier firms completed their 10 years. So even the two new firms were in complete sync. So it all depends on the attitude of the management, and the considerations for which joint audit would be required. And I would rather feel that it is for the auditor also to make management comfortable, that we will come to you only with valid issues, and not that one will bother you with 10 issues, other will come with another 10 issues, and we will become a headache. So if the genuine issues are identified and they are jointly discussed, where they take a call, where there is joint responsibility, it is not a headache but a value add. And it is for auditors to make it a success, and it is for the company to have that attitude towards the auditor, which will help joint audit add value to both of them.
Absolutely right, sir. Thank you so much. And that's why we have SA 299. Follow it completely in totality. Standardized. Yes, sir.
Mithil bhai, just to supplement what Nihar bhai has said, so another example I come to my mind is MRF. They have been having joint audit for last maybe almost 50 odd years, and that would being no such requirement, and of course much smaller company than as compared to the entities like Reliance. So I'm sure people are seeing value in that.
Yes, sir. Perfect. Absolutely rightly said, sir. I mean, two views, and sometimes two diametric opposite views make a lot of difference because it optimizes.
Yeah.
Thank you, sir. Thank you, Sanjay, sir. And sir, a next question, sir, and a poser to Sanjay, sir. Sir, the areas of audit are divided amongst the joint auditors. In such a case, if there is a complex issue which do not have a bearing on the scope of the other auditor, does the respective auditor involve the other auditor to have a richer discussion on the complex issue, or restrict oneself to the respective area, specific area only? What is the requirement of the essay in this regard? Sanjay, sir.
Okay, so if I have understood the question right, Mithil bhai, so you are saying there is a complex area, but it is in the scope of auditor A, whether auditor B, what is the responsibility of auditor B or auditor A? Which one you are referring to? Responsibility
Sir,
of auditor A?
so if the complex area is allocated to auditor A and auditor B believes that he wants to invite Auditor A for a discussion. Therefore, does Auditor B invite Auditor A or just rely on Auditor A's expertise? And also I may, make it a little more complex by saying the Auditor A is also deriving 75% of the fees. And therefore, does still the Auditor B have an opportunity as per essay to invite the Auditor A and to, invite for a discussion?
Okay.
And if so,
yeah. So as far as Auditor A dealing with a complex issue, he wants to discuss with the Auditor B, and Auditor B is supposed to be discussing the issue with Auditor. The answer is clearly yes. Any issue which has been brought to the attention of the joint auditor by any of the auditors, they are supposed to be discussing, deliberating, applying their mind jointly, and come to a conclusion on the audit related issues, whatever they have. The issue what you are referring is that there is a complex issue, but Auditor A doesn't want to discuss with the B, and B wants to force that issue to be discussed by A.
Yes, sir.
What you
Yes, sir. Yes, sir.
That is what you say. While strictly as per the standard, since this is an area which has been allocated specifically to the Auditor A, can Auditor B force Auditor A to have a discussion on those issues? The answer is no, because this is clearly an area which is separately and specifically included in the scope of Auditor A. So this is the strict interpretation, but practically would it happen that way? The answer is no, because as I said in the beginning itself, the whole objective of the joint auditor is that you get benefited by way of sharing of the knowledge and an expertise of each other. Now, if there is an issue which is complex, and if there is a complex issue, obviously both the auditor would be aware, because those issues would have got discussed in some audit committee, would be forming part of the minutes somewhere here or somewhere there, or you will come across those issues during the course of the walkthrough which both of the firm would perform. Okay, so would that issue would come to the knowledge of the Auditor B? The answer is yes. So the Auditor B should definitely engage with Auditor A, try to understand how these issues are getting addressed by the Auditor A. Practically, to my experience, I have not come across where any other auditor would resist in sharing that information, simply because when both the parties are going to be signing these, obviously nobody will resist, and resistance will lead to some kind of raising of a doubt between the joint auditor, which is not at all a healthy practice when both of them are going to be signing jointly. So on a practical standpoint, can Auditor B, let us say, insist on Auditor A to be sharing the information? Probably yes, because he will have a lot and enough information gathered from on that particular area through various other means which you have just discussed, and which is in the normal course of the audit which is supposed to be performing. This is not that he is supposed to be doing some kind of investigation and then he would be gather all that. Because you will find that issue in the internal audit report, you will find that issue in the some of the minutes. Okay, in the audit plan you will find those issues. So to my mind, while technically it may not be feasible, but practically will it get discussed, and should it get discussed? Yes, it should definitely get discussed.
And sir, formal email, I mean, again, it's theoretical, and I don't want to stretch the matter further, but a formal email in compliance with SA 299 zaruri hai ya not required?
So
formal
email from B to A zaruri hai, I would not put it ki zaruri hai, but at the same time, I mean, if Auditor A is not willing to discuss,
okay,
if Auditor A is not willing to come to the, let us say, the discussion table, then obviously Auditor B would like to fortify its position that this was squarely in their area, and to the extent we were, we knew, we raised those issues with the joint auditor. Okay. But to my mind, this will not stop at raising an email, because finally thereafter, if you are raising a doubt, then that should get addressed also in the during the course of the audit, right? The ideal thing, obviously, to know from the co-auditor, but if let us say that's not something which is working, then you need to be getting into the discussion with the management on this, because simply sending a mail and then keeping quiet, probably to my mind, will only add what do I say? Complications rather than resolving the issue. And finally, the whole objective of applying the two minds together and finding a best possible solution. So, in the spirit of that, I think it should be done.
Absolutely, sir. हम तो 12 बजे फोन कर देते हैं रात को ऑडिटर को, भाई ये क्या है, मसला क्या है, let us resolve it.
और आपका एक्सपीरियंस में कभी ना भी नहीं बोला होगा किसी ने.
Absolutely, sir. Yes, ma'am. Padmashri ji.
Yes. Yeah. So only one thing to add here is that it is, as sir rightly said, that there is nothing that is actually saying that you have to do it, but at the same time it is not prohibited. This entire matter once again is about coordination, is one thing that's very much to be understood. And second important thing is that fees cannot be the driver of quality. Once accepted, quality has to be the same irrespective of the fees. It cannot be the determinant of quality. So if you don't want to accept an engagement because you feel that the time and effort will be more, might as well discard it at the time of client acceptance stage rather than accepting it but then doing the poor quality work.
Absolutely, bang on, man. Thank you so much. Nihar sir, from the management perspective, do you think that appointment of joint auditors is a value proposition or beneficial in terms that one enjoys a larger spectrum of skills from more than one firm at the same time?
Yeah, I think to a large extent.
Yeah, please, sir.
To a large extent, this question is answered in the previous question, that even management would go as of today for joint audit only when there is volume, there are multiple sectors in which company is engaged, there are complexities, and where the joint audit proposition could certainly be value add. In the sense that it will give scope for rotation of fieldwork, it will give scope for additional view, that is 4 eyes view principle that we are talking about, and it would also help in terms of risk of over familiarity. So all the three principles that we discussed in the previous question, that when the audit committee would like to engage joint auditors, would hold true for answering whether there will be value addition. For smaller companies or even big volume companies with very simple operations, probably joint audit may not be that value add. And I think that is why the MCA is still thinking whether to make it mandatory, and if it is to be made mandatory, then what should be the parameters or what should be the conditions subject to which it would be mandatory. So value add would certainly be there, subject to all these that we have talked about.
Thank you so much, sir. Madam Padmashri Krastoji, so if I may, how are the engagement letters issued in case of appointment of auditors? Do each of the auditors issue a separate engagement letter?
So when we come to engagement letter, SA 299 revised has it specifically written down that engagement letters have to be common. If we have some clauses and the joint auditor has some clauses, first we synchronize and then give it to the company. That's one thing here. And then in addition to engagement letter, there will always be a JRS, which will be a joint responsibility statement, where we agree upon the allocation of work, and then we actually bifurcate it, and then that engagement letter is again a tripartite sign, because company should also be aware of what are we doing. So we put up the broad area distinction and then a common area that both auditors will be auditing, and then that is something that will be put about. So common areas we spoke about the joint responsibility, that is the financial statements and few of the areas which we cannot dispense off with. That's very necessary. In another important thing is that the rotation. I think someone touched upon there were 2 auditors and for 10 years they didn't change the areas. So advantages derived if you rotate it reasonably. I think generally in the 3rd or the 4th year is when the rotation happens, because in the 1st year you understand, 2nd year you draw efficiencies. So 3rd year you settle down, 4th year there is a rotation. You are doing one side of the income side of it, someone else does the expense side of it, so you stop it. After 3 to have a holistic view of the balance sheet, like after 2 years, you know what is happening in the entire financial statement. That would be necessary. And another thing is that obviously coordination is the key. I repeat it many times. At the same time, we should not be fighting with each other, which actually more beneficial to them. So whatever is our internal differences of opinion, maybe sit across the table and resolve it and have a common voice when we go to the management.
Ma'am, can you repeat,
No,
because there was a technical glitch?
Yeah. Yeah, little glitch. No, absolutely, Krastoji, very well said. And we as the fraternity, CA fraternity, have to always remain united. And therefore, if we keep that principle and we do a work where we internalize our differences with the joint auditor and thereafter go as a united front to the management, there are multiple advantages. One, in lighter vein, we can get more fees also. Second is we can actually convince them for a modification or an emphasis of matter when it is, when the management is very against, though ek se bhale do. So therefore, there are a lot of advantages also. I mean, within our CA fraternity, if I may call. So, sir, so ma'am, and the next question, ma'am, if I may, whether access to joint auditor, component auditors, working papers may be requested by the other auditor, joint auditor. I mean, yes, consolidating auditors do have an access to it, but more from a technical point of view, SQC1 and SA600. If there is some comment, would you like to make?
Yeah. So SQC1 doesn't restrict sharing of working paper, but there is an announcement by institute which says that it's our discretion. So working paper is our asset, and it is our discretion to share it at free will and how much extensiveness that we want to share it. So if we take the example of joint audit, some of the firms have this in the risk as signing is less, and not everything is left on the other person. If you're doing less than 50%, then you need to actually get some working papers or do some but that is not there in the standard. But can you hear me?
I think there is some glitch. There was some glitch in between.
Okay, can you hear me now?
Yeah, that's better. You may have to repeat that last sentence, if I may.
So the discretion of the sharing of the working paper depends on our policies, internal policies and procedure, and to what extent we are okay to provide. We may provide the whole of the working paper. We may provide extract of the working paper. We may sit across and discuss and tell them to note down. We may show our working paper and they may be asked to, note down. That is in case of joint auditor. But when it comes to component auditors working paper, say for example, I am the parent company auditor and you are the component auditors. One is, when we send a group audit instruction, you will have to fill it and give it to me with all the requisite supportings and whatever is the relevant issues. If you have issues, then the supporting for the issues. And even if there are qualification modification in the audit report, then the relevant supporting for it. Beyond that, if in any of the area which is a risk to the group as a whole, if we as a parent auditor are requesting for certain access to component audit working papers, it's necessary that we provide extracts of those working paper. One of the things that is very necessary to note here is that in few cases, we are the component working auditor and someone else is the parent auditor in some other jurisdiction. So what happens there is some of the countries has this rule is that once you give access to your working paper to the other country, the regulator automatically has an access to that. And if there is anything wrong that is found, then he can directly report to your regulator and action can be taken. So there you have to be very cautious. You have to put some kind of a disclaimer saying that this is not directly for regulatory purposes. You have to take the declaration maybe, and then you have to protect your interest also. And then say that specifically that this is only for the purpose of consolidation, nothing further, and things like that. And that will be necessary to put in place also. So we can provide, but then extract of working paper is generally what I have seen that we all provide generally, and not the entire file to the other auditor or the principal auditor.
Great point, ma'am. That's something which very often we don't realize about the sharing between two regulators. And, that's and that's a very interesting point that you brought out. And I think it's good learning for all of us. So now, since the session is on joint audit and there was a question that came up, why can't we have a joint question? And therefore now we have a joint question for all the panelists, because the session is for joint audits. So and one by one, in the order of Niyar sir and Sanjay sir and Krasto ji, if I may, I will start with the joint question, which is, or a joint poser. What are your views on the impact on audit quality with the appointment of joint auditors? And Sir Niyar sir, followed by Sanjay sir and Madam.
Yeah. See, the impact could be positive or negative, both the ways. But we have to make joint audit successful. And if you look at the responsibility, the liability of joint auditors, see, both would understand, assuming that there are only two joint auditors, both would understand their responsibility towards the joint audit. If I consider the other factors, see, the joint audit can have benefit of training of both the firms, or if there are more than two, even multiple firms, that the employees, the partners are trained in their own way, and the benefit of that training. Secondly, the benefit of their experience with different clients would be more to the audit assignment. Thirdly, I can say that audit quality will be better in terms of discussing the queries with the client, because they can take very strong stand against very aggressive accounting policy, if any the client is following. And many times it is observed that a single auditor, finds it difficult to convince the client that this is an aggressive accounting policy, because he would quote example of somebody else. But if there are joint auditors, both can convince that this is not the right way to go. And the way the different companies and corporates are suffering from the credit rating done by others later, the same would be the result if attention is not given to such matters, and if the auditor's objections are ruled out altogether. So these are various factors which go towards improving the audit quality. The only point of precaution is that the joint auditors should take it very seriously, should understand that there is joint responsibility in many areas which cannot be avoided, and therefore one should not feel relaxed or be complacent in the audit, and both should contribute effectively. Then joint audit would certainly be a quality audit, and it would improve the quality.
Thank you, sir. Sanjay, sir.
From the management's perspective, if I have to look at it, the only negative probably which I have come across in our discussions with the management is the additional burden of it puts on, let us say, the CFO's team, because when they are dealing with instead of one set of auditors, two set of auditors. So while that would also require, because some kind of an additional manpower to be created at the client's end, because they need to be attending to the two set of auditor at the same time. Okay. Other than that, I have not been able to. I mean, they have not been able to make out any case of any, let us say, the negatives of the joint audit. From the profession side, if I have to look at it from the profession side, I find there are a lot of positive in that. Apart from the or familiarity threat or the 4I principles, which we have been discussing all throughout the session, I think this also leads to the capacity building. Because in the profession, when there is a joint audit and then coupled with the rotation which is there, this leads to capacity building at all across, which was hitherto was concentrated, let us say, with the few firms. And you gave an example of France and the Denmark, where the concentration of the audit is the least in the EU region. So probably this is a right step in the direction. This may lead to, let us say, some kind of a decongestion of the audit in the few hands and attended threats which it has. So that's the biggest positive I see, Mithil bhai, on the joint audit for the profession as a whole. I'm not talking about individuals or anything. Or negative, I already said from the corporate side. I don't see any negative from the profession side.
Bang on, sir. Thank you so much. CA Padmashree Krestoji.
Yeah, so I think I go with what Nihar sir as well as Sanjay ji said. On a lighter note, I think one of the CFO in one of the forums was mentioning our life is not easy. We have to deal with 5 set of auditors. They said secretarial auditor, concurrent auditor, internal auditor, and then 2 statutory auditors. And at time they become 3 also, because it was a financial sector. So, CFOs also need to do some capacity building there to deal with so many people. Another negative that I see over there is that the people in the accounts team or the process team or any other team, they sometimes actually play around saying that this was given to that person. You go and ask them, and then they will say no, this was not their area. I don't know. They came and asked, and I have given to that person. So it happens. Those are the things that is why coordination is very, very important, so that we all speak the same language and we are on the same page. Positively, of course, there's a lot of efficiency that can be brought in. There can be technical ability that can be brought in. And as I discussed in one of the things, maybe on contentious issues on qualifications, modifications, 2 brains are always better than 1. And you can have look at from the overall 360-degree angle and add few more angles to your thought process or our thought process, as the case may be, and connect the dots better. And obviously by doing those things, that's what is the driving factor for the audit quality. I think one of the audit quality indicator is how much you consult and whether you take your own decision or you consult others. So I think you will be naturally having a tick box there, which will get ticked by doing more consultation, and quality is definitely going to improve.
No, absolutely. And you have to keep your egos aside. I mean, I may be a senior partner, but I still walk down to the cabin and meet the junior most partner or the manager and tell him, boss, तुम्हारा क्या issue है? चल भाई बेटा issue दिखा, हमारा ये issue है. I think that's the camaraderie, the kind of approach that we need to have. So
Yes.
again, we're running out of time, and but before that, we have the last question, and again, it's a joint question. So, and for this question, if I may, I would request first Sanjay ji, thereafter CA Padma Shri Krasto ji, and finally Nihar sir, so he can top it up with some words of wisdom from the ICI perspective. So the question is that what are the 3 key considerations for conducting effective joint audits?
Okay.
CA Sanjay Khimani.
Thank you, and that's very, very important, because finally people should see value in the joint audit. So how, which are the 3 key considerations if you have to look at it for effectively concluding on the joint audit? One is on the planning itself, there has to be a lot of coordination between both the joint audit firm. Because rotation at some point of time in 3 years period or whatever is the period which is there is going to be a rotation. So we need to be planning in a very coordinated manner. So that's something which is very, very important area. Second is developing an audit strategy, particularly nowadays when we are talking about a lot of computerization which takes place at the auditee's end. So the audit strategy, particularly to deal with the, let us say, your ITGC or the application control, so those kind of controls which are there. So that's the second area which is which we need to be, focusing on. And the third and the most important area is particularly the audit closure meetings, which takes place, let us say, between the engagement partners or the senior team members, where we bring out all the issues on the table. It is not necessary that we only bring out those issues which are supposed to be forming part of the presentation to those charged with the governance. We must bring out all the issues on the table, because rotation, as I said, so the issues what you see today could be impacting in the other areas in the joint audit. That's one thing. Second, if the joint auditor also has his views on something, that gets tabled and discussed, debated, and then action taken then and there. So all these, the essential part of all this, then the coordination and greater coordination and then the team efforts on the part of the joint auditors would make this is in a best or the very effective joint audit, and the client, that will also lead to a client satisfaction. And as a result, nobody is going to be complaining against the joint audit. But if we work in silos, so whatever the Padma Shri madam said, हमने उसको दे दिया, आप उससे ले लो, and all those. So it is just to avoid those kind of situations that we need to be working as a team.
Absolutely.
So that's it.
CA, absolutely. Thank you so much, sir. CA Krasto ji.
Thank you.
Yeah, so I think I agree to all the points which Sanjay sir said, and coordinate has been something that I'm continuously, hammering upon. Other than that, 3 important things that I look at is one, common areas. Don't leave anything in the common areas. It's very necessary. Financial. Hello.
Yeah, I think we lost you, ma'am. Hello.
Can you hear?
Yeah, we lost you, ma'am. I think.
Or if you can close camera, perhaps network will improve. I think she's disconnected.
I think this is the Institute's way of telling us, please go and have your lunch.
No, we'll surely have it after our cafe session gets over. But then
Just in
No,
enlightenment. Anyway, Madam
yeah, of course.
Krastoji, are you back? Krastoji is back or no? So in the meanwhile, should we go over to Nihar, sir?
Yes.
Yeah, okay. I think that coordination is the common point, and I would rather add that whatever work allocation is done, sitting together while forming the audit plan, that work allocation should be signed by all the joint auditors so that later there is no issue regarding it. And secondly, the documentation of the issues which are disposed of. That file is very important. And if you look at the manner in which the issues raised and their disposal is being handled by the NFRA in the recent past, it is very important that this document file is common. Like it may be different, but at least on the issues, the documentation should be common so that there is no discrepancy or rather difference in the statements given by the different auditors at the time of any disciplinary action that may come up. So these are the two or three points which I thought are important. Now, Madam is back. We can hear from her practical experience.
I'm sorry, there was an internet glitch and I got disconnected. So I think one is common areas which we spoke about. And second thing is cover the risks that are actually the audit risks and the business risk of the company, and try to address the risks of the company. And if other auditor is auditing significant areas of risk, it is necessary to discuss and document as to how it is getting mitigated. We can't just push it on to the other one's head. And though there is a provision that if both the auditors are disagreeing, you can use separate audit reports. That's one of the provisions of SA 299. Practically, I've never seen that happening anywhere. And it is very inconvenient for every place, like from the regulator, from the company, and from the auditor's perspective. So it is very necessary to look at the content and form of the audit report. And if there are any concerns around any of the EOM modification, anything, it is necessary to sit across the table and discuss well, and then ensure that it is appropriately concluded, so that we reach to a appropriate conclusion.
Thank you so much, Krastoji, Nihar sir, and Sanjay sir. And I think this has been a wonderful,
Thank you.
I would say, joint audit yatra journey that has been embarked upon by the ICI Institute. I think it's a yatra. We are moving all over the country, I'm sure, with this joint audit movement that we are aiming for as an ICI. And I think we are proud of being a member of ICI. So thank you to Durgesh ji, our Central Council member, and over to the organizer, Zuchika.
Thank you so much. Thank you so much, sir. Thank you, Nihar sir. Thank you, Padmashri ma'am. Thank you, Sanjay sir. The discussions have been really enriching to an extent that we have understood from those who have actually been doing joint audits. So the biggest takeaways for the participants would be that for a joint audit, from the planning stage to issue resolution to the documentation, we should be in tandem. We should all be working together. If the management has appointed joint auditors with the principle of 4 eyes, then we should meet those principles. We should actually tell them that, we have brainstormed, we have worked together as a team in coordination to deliver what they had wanted us to deliver. So it should be a value proposition for the firms, for the management as well. With this, I thank all the speakers, the moderator for today. Durgesh ji had to leave out early for some other meeting, and he has asked me to express his thanks to all the speakers on his behalf. Thank you so much. Thank you so much.
Thank you.
Thank you.
Everyone.
Thank you.
Thank you.
Thank you.